4 reasons why inflation makes the rich even richer. Every time prices go up, even just a little, you lose a small part of your own freedom. From daily meals, to rent, to every liter of gasoline, every cost gradually rises, silently eroding your ability to live comfortably month by month. And if you ever felt that your salary was no longer enough as before, you were witnessing the quietest transfer of wealth in human history, a cycle repeating across generations, almost unnoticed by everyone. Because inflation not only makes everything more expensive, but quietly decides again who will hold the future and who will be left behind. For most people, inflation feels like chaos, prices soaring out of control, savings evaporating, and the system seemingly shaken. But for those in power, inflation is exactly the state of order they desire. It's how the modern economy stays alive, how governments pay for wars without raising taxes, and how corporations quietly reduce the weight of their debt. It's also why the rich see their wealth steadily grow, while everyone else struggles to keep up, but never quite does. So, the real question isn't why inflation happens, but why it is allowed to recur, again and again. To understand that, you need to go back to the time when inflation was seen as a national emergency, not an economic goal, accepted as it is today. At the beginning of the 20th century, almost all major economies pegged their money to gold. Every banknote had to be backed by actual precious metal kept in reserve. This made money scarce but stable, and prevented governments from arbitrarily printing money to cover up mistakes. When budgets were in deficit, they had only 2 options: raise taxes or frankly admit failure. Back then, when inflation appeared, it was almost always the result of war or economic collapse, a sign that financial discipline had broken down. A government intentionally creating inflation was unimaginable. But everything completely flipped. The Great Depression of the 1930s shattered all illusions about monetary discipline. Prices fell freely, wages collapsed, and banks went bankrupt like dominoes. The economy nearly froze, not because of inflation, but deflation. As money increased in value over time, people no longer wanted to spend. Everyone held on to money knowing it would be worth more later. Debts grew heavier by the day, creating a deadly spiral in the economy. This spiral forced policymakers to reconsider from scratch how they understood and treated money. By the end of World War II, inflation was no longer feared, but became a useful tool. Governments after the war bore the responsibility, mountains of debt. Some countries even had debts exceeding 2% of GDP. They were completely unable to repay such massive debt in a straightforward manner, and in fact, they didn't try to. Instead, they let inflation quietly do part of the job for them. Throughout the 1950s and 1960s, global debt gradually shrank quietly. Not because countries suddenly became richer, but because the real value of those debts slowly eroded over time. A 1 trillion war bond, after 10 years, no longer held the same value or weight as originally. From this, the system learned an important lesson. As long as moderate inflation is maintained, problems once thought unsolvable could be addressed, almost unnoticed. Then in 1971, a major turning point occurred. President Nixon decided to close the gold window, ending the full convertibility of the dollar into gold. At first, this decision was seen as temporary, but it became a permanent change in the global monetary system. At that moment, money was no longer a fixed measure of value, but a tool for policy. For the first time in modern history, the world's primary currency was no longer backed by gold or any precious metal, but by trust. You could no longer exchange it for gold. You could only exchange it for more dollars. Inflation was no longer a side effect of the system, but a deliberately designed feature. From that moment, the rules of the game changed. Money could now be created almost without limit, as long as people continued to trust it. Governments could borrow without restriction, and banks could extend credit repeatedly, without facing real obstacles. Investors quickly realized that winners were not necessarily the savers and hard workers, but those who dared to borrow to play the game. Inflation quietly reverses the entire logic of how money works. If you hold cash, inflation gradually erodes its value. But if you hold debt, inflation works in your favor. Every year that prices rise slightly, the real value of the debt you owe decreases, making it lighter on your shoulders. A $1 million mortgage might feel overwhelming today, but 20 years later, with inflation occurring quietly each year, that seemingly enormous debt will feel much lighter, relative to income and new price levels. Meanwhile, assets you own, houses, stocks, or land, appreciate over the years. Inflation not only reduces the real value of debt, but also inflates the value of these assets, amplifying the wealth of their owners. This is the paradox embedded in the system. The same force of inflation drains the poor while enriching the rich. And this is not some secret conspiracy. It's simply the inevitable consequence of economic calculations behind inflation. Is the mechanism that allows a debt-based economy to function. This is the paradox embedded deep within the system itself. The same force of inflation both impoverishes the poor and enriches the wealthy. And this is not some secret conspiracy. It is simply the inevitable outcome of the economic calculations operating behind the scenes. Inflation is the mechanism that allows a debt-based economy to function. Without inflation, every unit of debt would have to be repaid in money that retains the same value as when it was borrowed, which is completely impossible in a system built on continuous credit expansion. Therefore, governments, central banks, and corporations quietly accept a truth. Allowing money to depreciate slightly each year is far better than letting the entire system collapse completely. Yet in that silent agreement, what really happens to ordinary people? The answer is simple and harsh. Their wages almost never keep up with the rate at which money loses value. Prices always rise faster than income, and savings, once the backbone of the middle class, gradually turn into a slow erosion that they can only watch helplessly. Those without significant assets, living solely on earned income, instead of capital, will feel as if they are running on an invisible treadmill that never stops. No matter how hard they try, they can't move forward. Inflation always favors those with assets, and not wage earners, punishing those who live cautiously. It turns saving, once considered a virtue, into a burden. The system tells you to save, but when you do, it silently punishes you. When banks pay you 3% interest, while inflation is its throat, you effectively don't earn any extra money. On the contrary, you are paying a fee just to prevent your deposited money from losing value too quickly. Meanwhile, those borrowing at around front interest to acquire assets, the value of those assets rise sharply each year, even by double digits, making the initial loan extremely advantageous. This is not market luck. It is how the system is designed to operate. Inflation does not redistribute money randomly. It always pushes wealth upwards in society. Those closest to the source of money, banks, governments, and corporations, are always the first to receive the new money. By the time it reaches you, its value has been diluted and its initial purchasing power. This phenomenon is called the Cantillon effect, named after an 18th century economist who recognized this law 3 centuries ago. When new money is injected into the system, those who touch it first benefit, while prices haven't yet adjusted. In the past, these were king and powerful merchants, and the powerful merchants. Today, the first beneficiaries are hedge funds and central banks. Inflation does not just change prices, it silently decides who can survive above that price level and who will be left behind. After 1901, the logic of money changed completely. What once punished overspending now encourages it. Constraints that once forced governments to maintain fiscal discipline now allow them to act freely, without previous limits. As credit gradually replaced savings, inflation became the silent glue, keeping the entire system running smoothly. By the 1980s and 1990s, the system had almost achieved the fragile balance it relied on to survive. Central banks promised price stability, targeting around 2% inflation, enough for the economy to keep growing, without the public noticing this invisible tax. 2% sounds harmless, even scientific, but over a generation, it can have the purchasing power of $1. The difference is that while ordinary people see their grocery bills double, the wealthy see their assets double, and even more. Because when inflation is stable, debt becomes predictable, and the rich fear no inflation. They own appreciating houses, businesses that can raise prices, stocks that steadily rise, and debts that become cheaper to repay. Inflation is their business partner, a silent ally amplifying every advantage. Governments like it too, because public debt shrinks over time when inflation persists. Thus, they fight deflation at all costs. Deflation exposes the fragility of the system, making debt heavier, bubbles visible, and forcing economic defaults. Inflation does the opposite. It hides cracks, fills gaps, and silently shifts the burden downward. And what about the banking sector? They love inflation the most, because it guarantees a world that never stops borrowing. As prices rise, saving becomes irrational, and you are forced to chase returns. And each race means a new loan, a new financial product, or a new derivative. The entire architecture of modern finance, from mortgages to bonds, or stock buybacks, is based on the assumption that Tomorrow's money will lose some value compared to today's money. The problem is, the lower you are in the less control you have over it. Living on a salary. Your income adjusts slower than inflation. Living off assets. Their value adjusts faster, and living on debt. Inflation will either crush you or make you rich. Depending on the type of debt you hold, credit card balances are poison. A fixed-rate mortgage is leverage. The wealthy understand this clearly. Most do not. That is how inflation turns knowledge into wealth. Then in 2008, the global financial crisis should have been an opportunity to reset the order and rebuild a healthier system. But instead, it became a model lesson on how to create controlled inflation. Central banks created of new dollars to save the system, not by giving it to the people, but by injecting it directly into banks and financial markets. Asset prices recovered almost overnight. Stocks and real estate soared, but wages did not. Quantitative easing, a technical term for printing money via bond purchases, sounds professional, but in reality it is not. It is a historical redistribution of wealth through asset inflation. Those who own prosper. Renters continue to wait. It is not corruption, it is policy. Historically, through asset inflation. Those who own prosper, while renters continue to wait. It is not corruption, it is policy. Then in 2020, the loop repeated once more. This time under the shadow of a global pandemic. Governments injected money directly into households to prevent collapse. Demand surged while supply chains broke, pushing inflation to a 40-year high. Once again, history repeated its tune. Stock markets hit record highs. Real estate became unaffordable, and those who had benefited from low interest rates now profited from scarcity. For a moment, the public thought inflation returned because of greedy corporations. But this was not new greed. It was old greed, nurtured by the system for decades. They were simply better players, because inflation does not pick winners. It only amplifies the advantage of those who already have leverage. Look at any period of high inflation in history, and you will see the pattern repeat. In Weimar Germany, the middle class lost all their assets, while industrialists holding real assets became wealthier than ever. In post-war England, inflation quietly wiped out national debt, while savings and pensions were eroded. In the 1970s US, stocks stagnated, but real estate and commodities created wealth for those who could own them. And in 2020, the top 1% amassed trillions, while middle-class households fell further behind. Different eras, same formula. Inflation is the oldest form of wealth transfer on Earth, and arguably the most legitimate. The public blames political greed or supply chains, but these are only symptoms. The root cause lies in the structure. We have built an economy dependent on credit expansion, and credit expansion requires inflation to survive. The alternative is not stability, but collapse. This is why even when central banks appear tough in the fight against inflation, their real task is not to eliminate it, but to control it. To make people feel there is stability, while the currency quietly loses value beneath their feet. Because if inflation truly hit zero, growth would stop and the machine would grind to a halt. Thus, the war on inflation becomes a performance, a delicate dance between credibility and demand. The Federal Reserve raises interest rates, markets panic, and just before something breaks, the flow reverses. Because deep inside, all those in power understand that a little inflation is only a small price to maintain the illusion of smooth operation. But there is something deeper than policy, a psychological factor. Inflation not only changes numbers, it also changes behavior. It teaches people to consume now, instead of planning for later. It punishes patience and often rewards risk-taking, turning savings into worry and speculation into hope. And in doing so, it creates the ideal citizen for a debt-based system. Always spending, never satisfied. Constantly chasing a sense of security they can never truly grasp. This is how inflation becomes a culture. We call it growth. We call it prosperity. But underneath it all, it is the same mechanism operating for centuries. A silent cycle of devaluation, reinflation, and rediscovery. Inflation helps empires remain solvent, provides liquidity to banks, and keeps the public obedient without questioning. And once you see it, you cannot unsee it. Because inflation is not random. It is how power measures time. It rewards those who live for the future, borrowers, investors, and credit controllers. It punishes those who live for the present, those who earn and save, and spend exactly what they have. And it forgets those who live in the past, those who still believe money holds value. That is why the rich love inflation and you do not. For them, it is not theft, it is strategy. Each generation relearns the same painful truth. Money's value is never fixed. The only question is whether you're in the group losing value or the group that decides it. Inflation does not appear naturally. It is the inevitable result of a world that wants everything now and pays for it later. It is the silent engine of debt, the fuel of empires, the lifeblood of a system that must always expand, even if the cost is the very people within it. And here lies the paradox. Without inflation, everything collapses. Deflation destroys borrowers, banks fail, inflation keeps the gears turning, regardless of who gets crushed in the middle. That is the moral equation of the modern economy. Growth at any cost. So next time you hear someone say, a little inflation is good for the economy, remember, good for whom? Not the workers saving to buy a home, nor retirees living on fixed incomes, but for those who already own a house, those who built the system to ensure prices never stop rising. Inflation is not the fault of capitalism. It is capitalism at full throttle, racing uphill with your wallet in its pocket. Because ultimately, inflation is not the fire, it is the oxygen. And the world we have built cannot breathe without it. If this gives you a new perspective, subscribe and like the Knowledge Station channel so you won't miss future valuable videos. History has all the answers, and I will show you where to find them.